Hi guys, I welcome you in this wonderful video. So there is something very important that I want to share with you today. So it's not some kind of technical trading methods or price action whatsoever. So it's some kind of advice that I want to give to traders who are trading with smaller accounts. So first of all, you need to know that we all start from there, so you can't just start from bigger accounts. Maybe if you have a lot of money, then you can start with bigger accounts, but even in that case, it is not advisable to start with bigger accounts. So when you trade with a smaller account, one thing that you have to keep in mind is that you have to acknowledge the fact and accept the fact that your account is so small. And then when you are making decisions as a trader, you have to make decisions that that account is going to accommodate. So you don't have to overload your account. So what do I mean by overloading your account? So let me make an illustration. So usually traders will see a market. Let's say this is a market we are trading, it's US 30. So what traders will do, maybe let's say they want to sell, they'll begin to open a lot of selling positions, which is one first mistake that usually a lot of traders do. They'll open maybe 4 selling positions in a single trade, in a single instrument. What this means is that as a trader, let's say you are risking maybe 2% in every particular trade. This means that in this single trade you have a risk like 8%, 8% of your account, which is something very, very bad. And what does it means further? It means that if this trade doesn't work out, you're gonna lose this kind of percentage or capital in your equity, which is something huge. What should you do as a trader in this scenario? Because the reason traders do this, it is because they only look at the market in the bright side, that okay, if the market works on my favor, it goes down, look how much I'm gonna make. Let's say you're trading with a risk reward, which is maybe you are risking 2% to make 4, which means that you're gonna make times 2 of this. You look on the bright side that wow, if this trade works, it means that I'm gonna make 16% in one single instrument. But usually trades don't always work, and you know that there are 50% chances that a trade works and there are 50% chances that a trade doesn't work, because even if you are a good analyst, you can never get your forecast correct 100% of the time. There will be some cases where it doesn't work, and always think on that side, always think on that side where your trades don't work. Just whenever you open your trade, make sure that you keep it in mind that what if this trade doesn't work? What if the position that I opened goes on the opposite side that I anticipated? Then with that mindset, you will know that risk management is one of the important things that you have to apply in your trading. Because what I always hear is that these guys, or traders with small accounts, they will always come to you with an excuse that their account is so small. And when you tell them, or when you ask them to show you their history of trades, you will see what I just spoke about. They'll be opening 10 positions in one single trade at the same time. And one other thing, they will be using bigger lot sizes which are not reasonable, which can be accommodated by their account. Why is that the case? It is because we traders, we always look on the bright side, which is something very, very bad. You see, when it comes to trading, your mindset, you should be realistic in your thinking and your reasoning, because this is your money that we are putting here. You are not just trading a demo account. This is your money, and you know exactly that when the trade doesn't work, or when you keep on losing, you will feel some kind of pain, because you are losing your real money. So you have to make sure that when you are trading, you keep risk management in mind always. And also another thing that I've noticed is that we traders, we tend to rush things a lot. We tend to rush things a lot. For an example, if your account is like very small, like $10, don't think that you can make maybe up to $300 in a day or up to $1,000 in a week. Have a reasonable target. If the market allows you to make $300 a day, then you will make it. How does the market allow you? For an example, let me pause again. For an example, let's say you analyze here and you say, okay, here I'm gonna sell. Ne? When you press the sell button and you put everything in order, you put your stop loss, you risk the correct percentage that you want to risk. Say you are risking 2%, you make sure that your stop loss is equals to this percentage. And then as the trade goes down, what you have to make sure that you avoid this thing of targets. Avoid these things of target. So what do I mean? Let's say a trader will sell and say, okay, my take profit is going to be here. Yes, you should set your take profit here, but what I always say is that a take profit is not for exiting your trades. You don't exit your trade when price touches the take profit. However, you exit your trades when the price seems to be reversing here, because prices don't just reverse by surprise. So when price approaches this area, when it starts to slow down, that's when you're gonna close your trades. And maybe let's say the take profit is gonna assist you if you are not here, if you are not monitoring your trades. Let's say you are doing something else and the market is moving in the background, then your take profit is gonna save you. But if you are watching, you are managing and monitoring your trades, you don't allow just price to the take profit to just take you out, even if the price is still strong. So if the prices are still strong, even when they are about to approach your take profit, that way you have to move it and adjust it to a different level and allow the price to demonstrate its strength. And as it moves down, you know that you'll have an advantage. Then that's when you can make a lot of money in a single trade, because the price allowed you to do so and you didn't go against it by just closing your trade in your so-called target. I hope that is making some sense. So make sure that you always have reasonable targets as a trader. And I don't always encourage traders to have targets at all, because the thing of targets, it makes you to force trades. It makes you to force positions which you were not supposed to force. Now let's say you are having a target to say, maybe I want to make $30 in a single day. What if the market is not showing you opportunities that day? You're gonna force yourself into that because you have a target. So I don't encourage that. And also, one other important thing is that as a trader, when you are trading, when you are making decisions, you know your account is so small. So make sure that you filter your trades. Don't just take any trade because it looks like it's promising or because it looks like it's gonna work. Don't do that. Make sure that you filter your trades. Filter your trades, meaning take trades which are only high quality or which are only meeting all the requirements that your strategy has set. So if you have a strategy that, okay, I look for A, B, C, always take a trade that meets all these criteria, which meets A, which meets B, which meets C. Don't just take trades like you have nothing to lose. So make sure that you take only high quality trades that you trust, trade that you know that even if I lose this trade, okay, at least I will not beat myself up because I followed all my trading rules. So make sure that you don't just jump into every trade and any trade. The last thing that I want to say is that the only way to improve as a trader, it is through learning. So make sure that you get knowledge, make sure that you read, make sure that you watch videos, make sure that you practice what you have learned. In that way, the more your knowledge increases, the better you understand the market. And the more you understand the market, the easier it will be for you to make successful decisions. So let me just leave it here, guys. But one other important thing, never give up. Even if you don't have a lot of capital to fund your account, we all started there. We all started from like funding $10, funding $15, and we became genuine with our decision making when it comes to trading. That's why it ended up paying off, because we focused into the truth, we focused into the reality and say, okay, we are not gonna allow the market to tempt us into making stupid decisions, but we're gonna follow our rules. We're gonna practice good risk management, and then through that we're able to grow. So that's also one thing that's gonna save you. Make sure that you put your risk management in order. Even if you know how to analyze, if you don't have proper risk management, you will not be successful as a trader. So thank you guys for watching this video.